This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia delivered less gas to Europe on Wednesday in a further escalation of an energy standoff between Moscow and the European Union that will make it harder, and costlier, for the bloc to fill up storage ahead of the winter heating season. The cut in supplies, flagged by Gazprom earlier this week, has reduced the capacity of Nord Stream 1 pipeline, the major delivery route to Europe for Russian gas, to a mere fifth of its total capacity. On Tuesday, EU countries approved a weakened emergency plan to curb gas demand after striking compromise deals to limit cuts for some countries, hoping lower consumption will ease the impact in case Moscow stops supplies altogether.
The number of tankers used for storing fuel oil along the Singapore Strait has risen since the Ukraine war broke out and could rise further as more of Russia's supplies hit by sanctions head to Asia, industry sources and analysts said. A rise in floating storage supply along the strategic waterway is an indicator that more supplies are available to Asia, which will help ease tight markets. But, at the same time, it could limit a recovery in spot fuel oil prices for the year and weigh on Asian refining profits for the grade. Earlier this month, the European Union said it may ban the import and transit of some fuel oil from Russia from August 10, around 6 months ahead of a planned deadline.
Moving on to the top news in the energy sector.
China's clean energy transition will continue despite the challenges to global energy security posed by the conflict in Ukraine and a return to coal in Europe, and it remains on track to meet its carbon goals, energy officials said on Wednesday. The world's top energy consumer and greenhouse gas emitter has been trying to strike a balance between its commitments to bring emissions to a peak by 2030 and its need to guarantee energy supplies and rejuvenate its economy. But China is still poised to expand the share of non-fossil fuel energy in overall consumption by an average of 1 percentage point a year between now and 2030, said Zhang Jianhua, director of the National Energy Administration, at a news conference in Beijing.
Russia is likely to remain the dominant supplier of oil through the Kazakhstan-China pipeline even as Kazakhstan looks to diversify export routes, industry players say. The Central Asian nation ships most of its crude to Western markets via Russia, but the main pipeline it utilizes has curbed shipments twice so far this year. Most recently, a Russian court ordered the CPC pipeline to suspend operations over spill concerns, before another court changed the ruling to a fine. Russia, under pressure from Western sanctions over Ukraine, is likely to offer a better price than Kazakhstan, market players say. Next, we have the top news in metal markets. Falling aluminium prices that have squeezed producers' profit margins in recent months will do little to slow production in China given the high costs of downtime and hopes for an overseas demand surge. The expected steady supply from China, the world's biggest producer of the light metal, should pressure domestic prices in the near term until domestic demand improves while helping to fill overseas demand, especially in Europe and the United States. State-backed metals research house Antica forecasts China's aluminium output will reach 10.42 million tons in the third quarter and 10.54 million in the fourth quarter, up from 10.11 million in the second quarter. Dalian iron ore hit a fresh 2-week high on Wednesday after data showed profits at industrial firms in China rebounded last month, although troubles in the country's property sector kept the steelmaking ingredients gains in Singapore muted. The benchmark September contract on China's Dalian Commodity Exchange ended daytime trade 2.4% up at 744 yuan and 50 fen, $110.11 a ton. On the Singapore Exchange, the most traded September iron ore was up 0.3% at $112.45 a ton, as of 0750 GMT, after a 14% rally over the last 3 sessions, indicating waning excitement over news of a rescue fund for Chinese property developers. We will now look at the top news in the agricultural sector. Seth Meyer, chief economist at the United States Department of Agriculture, said on Tuesday weaker commodities prices will take longer to ease food inflation in the United States than in the developing world. Some of the world's poorest nations were hardest hit by a spike in corn and wheat prices after Russia's invasion of major grains producer Ukraine in late February, due to their reliance on imports and the large percentage of income consumers spend on food. Now, Meyer said developing countries in North Africa and elsewhere could be the first to see some relief in prices at grocery stores, as commodity crops have fallen to pre-war levels and the North American crops develops.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.